Good morning. My name is Susan Hindle-Baroni. I am the Secretary General of IMMFA, which is the trade association which represents CNAV money market funds in Europe. When EuroFinance asked me to give this presentation this morning, they said they wanted a short and interesting presentation on money market funds and money market fund regulation. And to be honest, it's tricky because it's a very boring and technical subject, so I'm going to do my best. Whoops. Looking at the list of things that we were hoping to cover this morning, realistically, we've only got 12 or 15 minutes, and I really want to kind of focus in on the really important part of the debate. Really, if we can't understand what it is about money market funds that are great, then we don't stand much chance in kind of distilling that and then transmitting that to the regulators to help them understand what it's really important to keep in these products going forward. Because we are in a state of flux in the money market fund industry, and it's a really useful product to use, so it's really important that we take that and we take it forward to the future so that it continues to be a useful product, a useful tool for you to use in your treasury. I'm going to speak specifically about CNAV money market funds, because that's kind of what we represent. And I'm going to think about the success we've had in them since before the crisis. The assets under management in CNAV money market funds at the beginning of before the crisis, on the 1st of January 2007, were 260 billion euros. Right now, we're in excess of 500 billion euros. So that's €500 billion invested in CNAV money market funds. So there must be something in there. There must be something that you as corporate treasurers and all sorts of other investors, what you find valuable. And so what it's really, really important is that we can explain that to make sure that product is there for you to use in the future, to help manage your businesses, to help keep your cash safe. The reason I'm dwelling on this is not just kind of self-congratulation to say, hey, we've got a great product. It's just really, it's really crucial that we explain what it is that's there. A key part of the work that IMMFA has done in the last year has been really providing the opportunity for investors to have a direct dialogue with the politicians, with regulators, so they can explain all these issues themselves. We did a dinner on Monday of this week. We had a group of 6 quite different investors, corporates, pension funds, local authorities. We had a dinner with Nina Gill, who is the rapporteur in the European Parliament. So she's the person who's responsible in Parliament for coordinating the work in the Econ Committee. So it was great because the investors had the chance to explain to her what they find valuable, but it's also great because Nina Gill gets to ask the questions directly to investors. And honestly, she's probably more likely to believe what they say to her than what you as fund managers or me as a trade association person is going to tell her. So I think encouraging that dialogue directly between investors and the regulators or the politicians is really quite key. So let's come back to money market funds and think about what it is about them that you all really love. And I think the thing that comes to me overwhelmingly when I'm kind of talking to investors is ease of use. Ease of use, T+0 settlement, and the ability to transact intraday. I think that's the kind of #1 feature which I'm told helps you run your businesses better. I think the second feature, which personally is my favorite, is diversification, and why diversification is important. If we think back to before the crisis and kind of what our perception of banks was before the crisis, I think it's changed. Before the crisis, I think it was kind of sort of seen as, there were several big banks. In each country, there were several big banks, and you felt they were very safe, and it's quite okay to have quite a lot of money on deposit with those banks. Well, now I think the perception has changed. It's no longer seen as maybe a sensible way to handle your cash, to have just several big lumps of cash. You need to have that risk diversified across lots of different credit risks. And also, the beauty of this, and probably why it's my favorite, is that we can prove it, right? There is modern portfolio theory which demonstrates that your overall risk will be lower if you've got your risk diversified amongst lots of different assets rather than being deposited just with one. So diversification, I think, is key to the safety of your money. But that brings us on to the third point about money market funds, which I think is something which you told me you definitely value. And that is the fact that you need to do credit analysis. If you're going to have your money invested in lots of different assets, you need to be able to analyze those credits, and you need to be able to monitor them as time goes on. So the beauty of a money market fund is they have the economy of scale that they can employ lots of credit analysts, so they have lots of experience, and you know that you are getting the best analysis available on those credits to make sure we don't fall. You know, it's by no means guaranteed. If only they realize that. It's by no means guaranteed, but we hope we can avoid the pitfalls like Iceland, like credits that we've kind of had problems with in the past. So where have we got to? We have got ease of use. We have got diversification of credit, and we've got the outsourcing of credit analysis. So are those the kind of really important things? Is that why you like money market funds? Is that why volume has doubled, or AUM has doubled since before the crisis? There are two more things that I would like to add. And the first one is it's liquidity. There's a reason why so many of you have got more cash now than you had previously. It's because if you are being prudent, you are carrying more cash than you used to. You know, you need to meet your obligations as they come due, and the same is true for a money market fund. We need to have cash available, ready to pay investors when they want to redeem. Currently, in European money market fund regulation, there is no requirement to have any liquidity available at any time. The IMMFA members here will run funds that they voluntarily adhere to the IMMFA code of practice, and we have a limit. We ask for a certain amount to be coming free overnight, and another amount coming free in the next working week. And we think that is essential. We think that's essential. That's something that is put into the European regulation in the future. So then thinking about kind of what else we've learned from the crisis, I think maybe before the crisis, people were a lot more trusting. You trusted your money market fund to be invested in assets that were probably good for the fund. And that probably isn't good enough anymore. I think now, if you are giving your money to a money market fund, you need to know what that money is invested in. So you need to have transparency and good disclosure. And not only on the assets that are in there, but on how you're pricing them. How are those assets been priced? Are they been priced by amortized cost accounting? Are they been priced by a call down to the desk to see what they think it's worth? Or has it been priced by an independent pricing source? I think these are all important things, and that you and the investors in the funds really need to know to make the funds stronger. So I think I've got up to 5 now. We have got ease of use and same-day settlement. We have got diversification. We have got outsourced credit analysis. We have got good levels of prescribed liquidity. And we've got good transparency and disclosure. So I think now we've got the nub of the issue. We have got why are the funds useful to you? We have got what makes these funds safe. We have got what makes them robust and able to withstand the pressures from a turbulent market. And more than that, we have got the information that you as investors need to make a rational choice in a stress market where you are not sure what's in your fund. I actually want to give you an example on this, and it's a slight bit of a detour, but if you go back to about the second half of 2006, and people start talking about subprime mortgages, it's like, what's a subprime mortgage? I didn't know what a subprime mortgage was, so I went off and found out. And then you think, okay, am I exposed to subprime mortgages? And I said, well, I haven't invested in a subprime mortgage, but I wonder if the people that I've got my money with, did they invest in subprime mortgages? And we didn't know. And that's what caused so much concern in the market. It's like, I don't actually know what I'm exposed to. And that's why really transparency is so important. And if we provide transparency, it's a way of allaying fear. It's a way of allaying uncertainty. And so you're in a better position to make your decisions. Just 1 second, not to make sure I don't miss anything out. Okay, so we've got our 5 essentials here. I think some of you might be thinking, in fact, some of my members are looking around thinking, she hasn't talked about CNAV and VNAV. And I think that's a really interesting point, because what we've talked about is why are funds strong? Why are funds robust? How can we protect funds from being systemically risky? And we don't need to talk about CNAV and VNAV, because whether a fund is CNAV or VNAV is irrelevant in terms of systemic risk. So the point of the new regulations is to try and reduce systemic risk. So really, we shouldn't be making people transfer from being a CNAV to a VNAV, Because in terms of systemic risk, it absolutely achieves nothing. But in terms of the usefulness to you as investors, it makes a lot of difference. A lot of you like the fact that you can transact at unit value. It makes life easy to come in and out at unit value. You like the fact that you know you haven't got any issues with tax, and you know the fact that you haven't got any issues with cash and cash equivalents. So really, we would say it does make a lot of problem. It does create a lot of problems from the usefulness of the fund. And there's one thing I'd really like to add actually here, and it's bizarre. It's a really technical issue, and yet I just do feel like a lot of the discussion that we're having is really coming down to this. If you want to have ease of use, if you want fairness and transparency in pricing, and if you want to have same-day settlement and the ability to transact intraday, I would argue that you need to use amortized cost accounting unless you're going to introduce some other kind of risk. Because if you're trying to price a fund any other way, the ability to actually price it and at the same time strike your price is a very difficult operational issue. And bizarrely, although it seems quite esoteric when you first start discussing funds, I think that's what a lot of our debate will come down to. So we've distilled why we think these various things are important. I'm just going to touch on the European debate. We're at a really interesting part of the European debate right now. The European Commission came out with their proposal for regulation over a year ago. Right now, the MEPs, so that's the members of Parliament, are discussing their response. That's Nina Gill and the other shadow rapporteurs. The Council of Ministers, that's the representatives of the member states, they are considering their response. They will come up with their own versions of what they think the regulation should look like, and then all three of them come back together and hash it out to come up with the final proposal for a regulation. So that's why it's a really good time for input into this debate. There is nothing, coming back to the dinner we did on Monday, there is nothing more valuable than input directly from investors, because that is what is so much more credible than me kind of standing up in front of them and telling them why I think it's a good thing. So honestly, I mean, the members here, quite a lot of my member firms are here in the room. I don't want to flatter them too much, but actually, they can run funds no matter what the rules are, right? Whatever rules we come out with, they'll be able to run funds that meet those rules. But the problem will be is if we come out with a set of rules that wrecks the product, there won't be a product there for you to use. There won't be a product there for you to use which allows you to handle your day-to-day cash management, which enables you to diversify your risk in a low-cost way. So I suppose my overall message, and I have no idea how I'm doing on timing, our overall message is speak to your fund advisors. By all means, come to IMMFA or come to the IMMFA website, but please get involved in the debate. Write to your MEP, let them know what it is about money funds in general. It doesn't have to be about senior money market funds, but just let them know what it is about money market funds that you like and why you find it a really valuable tool. And that's it.